Okay, just a very quick one to still remind you people when I talk about, your other block tool that will help you sometime when the market becomes so choppy and all of that. But outside that, you should know that, okay, definitely it's not about all the time the indicator as it were, but it's only going to help you especially when you don't know how to mark all those market structure and all of that. So you can narrow down to 5 minutes and still find an entry. If you look at this now, I just took an entry not long and I'm already $16 profit, right? Now, if all things being equal, that means the market should be traveling up as much as possible. And so sometime when I don't remember to send us take a kind of signals and all of that. So the market is going to give you as much as possible. I talk about the demand zone. Okay. So let me take off all of this. Let me take off all of those our tools. Okay. I gave two tools. If you have not watched it, that means you are the one that, that are not helping yourself. All right. If you have not watched those tools that I gave that time, that means you are the one causing issues for yourself. Because I did the tool, the first one, the second one, and why you need to pay attention to them. One was with flu trade and one was without flu trade. So you have a choice of alternating them as you like. Now, so look at it. The market, if I had wanted to just take a profit, because I discovered that people are scalping and making a lot of money in gold. Look at it. This is already $17, $20 for taking it and all of that. So now let's go back. Now, so the market as it were. So let me take off all of those things I've marked in my market. I've showed you how you mark market and how you identify a trend and you follow the trend and all of that. So we have seen, I said, the first thing you need to do, I will need to do this over and again that will help you to identify all of those kind of stuff and all of that. So if you go to daily time frame, I've told you that you need to mark some of those points on daily time frame. Haven't seen that the market was doing what it was doing. And even if you go by this, we want to see that the market actually swept yesterday low or high as it were, but whichever one that comes first, no issue. Now, but if you go back to your maybe 4 hour time frame, you could break a structure and you see that the market has actually maintained a kind of support consistently down here. You discover that, right? Look at it here. Now, when I talk about past strategy, is the foundation of everything we build on. Past strategy is price action, all right? Price action, support, and resistance. So on a good day, my normal trading pattern is that when I come into the market, what do I want to do? I want to open and go to daily time frame. Number one, I want to see the structure. Are we down up? Are we uptrend or downtrend? We are uptrend, but for temporarily, market is actually shabby and then making some output, right? And then so the next thing I do, you see me, I want to mark the high of the day and the low of the day. I mean, the previous day. So just understand what I tried to push. Okay. So if I've marked all of these points and the market was just doing what it was doing. So if I go to 4 hours, now I mark out all what we call pivot point. I already have this one before. This was a structure before. So that means on this, my pivot point is very, very simple to identify other area of interest. Okay. We talk about area of interest is very important or point of interest. So here we have this market. So this market is struggling. Of course, we need to know that by this structure, if I want to mark my structure here, you discover that on 4 hours, you actually could not mark any reasonable structure as it were. So, but I need to go down to 1 hour time frame. Now, going back to 1 hour time frame, see what you can identify. So, 1 hour time frame, what can we see? Perhaps you can see a low here, right? This is a low here, and you can see that this low here, there's a break of structure that created this low here. So that means if you come back to this point, you are going to see another market. This is what do we call? Since this one created a low, and then we have all this together. Another low was actually here. So this market have been struggling. You can see that this gold have been struggling here. So this is a low, and then this is a high. So the market broke this. That means we have a market structure shift, and then we have a break of structure, another one here. So then we have the market return back here. We have another break of structure. Okay, so you can see the market is actually confusing and choppy as it were. Then we have another break of structure. Here we have a change of character. How do we have that? We have a change of character here. So we're here. So this is a high. So we have a change of character here. Then here we have the market return back to the point. We have a break of structure down here. Look at it here. This is a break of structure. 1 hour time frame. We have a market return back to it. Makes sense. Then we have another break of structure here. Just follow me. Very simple to see. Then the market has done, and they went back to grab liquidity as much as possible. And then the market was trending another trend. So here we have the market move up here. So we can see the whole thing here. This is what we call liquidity void, right? This rally up here, this is liquidity void. And then you expect the market to come down to that origin of that liquidity and then bounce, okay? So here you have this. So I'm just trying to couple a lot of things into one box. So you have this now that this market has returned back. And then now what happened here? This last candle here is a demand zone, meaning that it's at the support point. If you go back to this, your 4 hours time frame before. Do you understand? So it's very, very important. Okay. You can understand the fact that market is what it is and then giving you what you are looking at. Okay, so now let's quickly go. Am I communicating? Good. So now we have this, the market structure. So we have this movement. So let's go to 30 minutes. Now, I'm just doing this so that you have the architectural design even before you use your indicator. But I know your indicator will help you a lot to easily find an entry if you can follow my teaching as much as possible. So this is the teaching. Now here, you already know that this is a demand zone, right? Because market has touched this point severally. We have this touch point, this touch point, this touch point, this touch point. Do you see? This is a demand zone. So if this is a demand zone, remember, now this one here is our previous day low. This point here, this is previous day low. Let me just type it. This is PD, this is, okay. So this is our previous day PDL, okay? So we just have this our previous day low, and then this is PDA. Now, so one of the lovely things I said, if your previous day low is taken, it gives you good edge. But if it's not taken, nevertheless, that doesn't stop you not to take your trade. So you have this, what we have here is PDH. That's the previous day high. Okay, so that's why you mark this line. I can make it thicker so that you can see the differences. All right, so PDL and PDH. Okay, so I put it there. So I just make it thicker. So here we have this. So the market has been doing what it was doing. Remember, we're now in 30 minutes. So the market actually broke. This is a break of structure up here. This is a break of structure up here. Okay, so this is a break of structure up here. So if you have a break of structure, what next do you want to have? Then there's a point that created that break of structure, which is here. Okay, so you expect the market to return back and then respect this point, but it broke it. Look at how they broke it. It broke that break of structure, and that means it has changed in momentum. So changing momentum, that is market structure shift. And then we now have another break of structure. This is 30 minutes. So another break of structure. We have the origin here. The market traveled to it neatly. See, if you can work with this thing I'm teaching us, we're going to be very beautifully fine. That's the truth. Then we have a break of structure. And then here the market moved and massively dropped down to this point, to this support zone. This is support. Okay, so but that's a break of structure, but it got to this support and then we bounce up again. So bouncing up to this point, what you are waiting for is the market to return back to this support zone. Okay, now we actually took a move because the other time the market was taking a kind of dimension. Now the market has come back to this support. Even when you enter the market and it stop you out, because you already identified that this is support zone, that gives you some confidence to say, okay, I'm going to get into the support zone. So the market have come down to this point and create a support zone or get to the support zone. So I'm looking for an entry. So let's go to 15 minutes. Now, if you go to 15 minutes, you can see this is a touch point, this is a touch point, this is a touch point. So the thought this one too should create a bounce, right? And so if you now look at 15 minutes too, you still have a break of structure. So here, when the market traveled down to this point, we have something here. So the market came down to this point and rally up, okay? So this rally up, it now created this low. So look at this low here now. This low it created, okay? So it created this low, all right? So market move up and came down and created this low. So let's just call it this low. Okay, so here, what you have here is a break of structure. We move down and then we actually stopped over here Then, so, but we are on a support zone. And so at that support zone, I'm looking for an entry. That was what made me get this entry here. Look at it. I'm on $40 profit already on that entry. So if that is the case, make a lot of sense. So that means this is my 15-minute time frame. If I'm entering the market here, though this market entering this market was dangerous. Can I tell you why it was dangerous? Look at the previous day low. That means there's a liquidity hiding on the previous day low. Do you understand? But when I enter here, if I have the guts to enter, my stop might take so when the market come down here, we have this move up and all of that. So if I'm entering the market anywhere here, my stop loss have to be below this point. You know why? The market can come back to sweep this liquidity. So, but that's going to give me over 280 pips stop loss. So that means I'm going to be targeting here 1:2 risk reward. We're going to make up to this point. Okay, let's look at it. 1:2 risk reward will go to about 4,119. It doesn't matter too much. And then, so if I now want to do proper refinement, I go back to 5 minutes again so that I will find a faster entry if possible. But that doesn't really make any difference because sometimes the more you go down, the more confused you become because market will have set some other kind of structure that you wouldn't understand. So let's quickly look at this market here. This is a breakup structure. The market came down here and it created a new structure here. Look at it here. It's unfortunate that the market don't even return back because this is a breakup structure. This is a low. This is a higher low. This is a lower low. So the market has run it up here. We're supposed to have a return back to the origin. We're supposed to be here, but maybe this don't want to happen. But this is the part of scalping now. So if you go to 3-minute time frame, you will have find your scalping edge. Okay. Okay, so look at it. So the market is rallying up. So you can target that the market was going to get up here because at this point you have seen in your 3 minute, it has actually created. See what happened here that we didn't observe on time. In your 3 minute, this is a low and this is a high. Look at it in your 3 minute. Okay, just a moment. Okay, so in your 3 minutes, something has happened. Something has happened in your 3 minutes. Even in your 1 minute, something has happened because this is a demand zone. So what happened in your 3 minutes is that this is a low. Okay, this is a what? A low. Oh, quickly, let's do that. So here is a low, and then it has created a high here. Good. So it created a high here. Are you getting it now? So this high that was created here, then there's a new low here. There is a new low here. So this new low, can you see now? This new low is powerful, right? A very powerful new low. So with this new low, what has happened is that there's a break of structure here. This break of structure had make this market move up here. That's a new high. So this break of structure, what you have is this other block. And this market tap into it. That's your entry on 3-minute time frame. So this your entry will have taken profit by now because here, this is your entry on this 3 minute. So as you tap into this other block is your entry. Your stop loss, of course, you can even take it below the whole thing here. No 1:2 risk reward. So it's already done. It's already done, ladies and gentlemen. That's what you need to understand. Sorry. Please, I have a market I was trying to check. Okay. Before get me stopped. Oh, okay. This is not the market. Okay. So this is your new low because you have come down to lower time frame because the market is not too beautiful and all of that. This is your new low, and then you have entered. Okay. So the market continue. So you probably can even target where this high was, which is here. Can you see now? So that means you're actually targeting up there. That is 4082 at first. So, but here you have this. Now, if you go back to 1 minute, you're going to find similar thing. Look at it. Can you see 1 minute? So here, this is a low. This is a break of structure. This is origin, right? This is an origin. The market has returned back to it and give you a new entry. So your entry was here. And then if your entry was there, so let me take off this one now. So Now, I say when the market is crazily choppy, then what happened is that you are going to become a scalper. So your stop loss can still be below here, but most people will not take that. They will put it below this other block. So that means greatly. Now, 1:2 risk reward will be here. And then you have taken the 1:2 risk reward and still targeting the market to continue to move up so that you can have your edge. Are you getting it now? Now, so let's quickly go back to 15 minutes, and I'm going to show you something very quickly. Now, if we go back to 15 minutes, so let's now bring back all our stuff. Let's bring up our stuff. So number one, you bring in your Maxwell, and at the same time, this other one, other block. Now, so look at our Maxwell. So our Maxwell still show here as a resistance because this is a bearish order block that your market is supposed to return back to. Why? The markets on 15 minutes have shown that this is an internal break of structure. After this break of structure, you expect the market to return back up here. But there's something very important you see here on this your market. So let's go here. Let's go here. You're going to see something. But I told you that if you have a previous day low below you, you have to be careful because the market. Now, what may happen is this. The market will come back to this point, probably come back to this point, probably 4076, right? And then sell again. Selling to come and sweep this liquidity. Just observe, it may really happen. So come to sweep this liquidity. But somebody already made money before all of this liquidity you're targeting. So, but let's go quickly. If you go to 5 minutes, right, you could see your entry clearly before time. This is a fair value gap. All right, all of this point anyway are liquidity void. The market moves straight down without any kind of fear of favor. Okay, so sorry. Okay, so there we go here. So look at on 3 minute time frame. Okay, this is 5 minute time frame. So we still have the same thing here. The market move and then giving you what you want. You have market structure shift. This is a break of structure. This market structure shift. So understand when market structure shift happen, market's about to change and all of that. Now, if you go to 3 minutes, let's quickly look at it. Now, can you see your 3 minutes? Your 3 minutes are actually, that's why when you have the basic understanding, the indicator will help you, give you an edge. Okay. So let's check my markets. How much am I running now? I'm running on $43 profit, right? I'm running on $43 profit. So if you look at it quickly here, so this is entirely external structure because this is low, another low has happened here, meaning that this is a total break of structure. But so looking at in the 3 minutes, what happened here? You have a market structure shift. Now it is 1 minute that's going to, I told you when market becomes so choppy, 1 minute define most thing for you. Look at it here. So now having known that this is a demand zone, so what happened here? Can you see something here? The exact thing I draw for you was what happened here. Let's go. Let's go quickly, everybody. Now here you have a low. Look at the low here. Probably you didn't see very well. Look at this LL, it's a low. Then here is a high. Now, when the market came here, it returned back down here, but it didn't get to this low. This is a higher low in this lower time frame. This is a higher low. Now, this is an internal market structure shift. Internal market structure shift. So when this market structure shifted, now here you have, look at this. This is the last bearish candle that occurred before that give birth to that shift in structure. Here, can you see now? Marvelous, right? Good. Now, if that happens, it's very simple. You are looking at this market come back here. The market had come up to this point and start retracing. Now, you as a patient trader, you're waiting for the market. Sometimes it's as if you have lost the entry. You have not lost the entry because look at it. The market was coming down here. So there are fair value gaps that were here, probably here. Now, lovely. Now, there's a liquidity here. There's a liquidity here. So when the market sweep liquidity, it return back up, no problem. There's a liquidity there. And then we have the other block, this other block. So this other block are giving you an edge. Very fantastic, right? Then that means your entry is to be here. Now, this lovely thing about gold is that you can go down to as low as at any time frame you want to go. So you can see I'm on $55 profit right now on gold that I just entered. I'm on $55 profit right now on gold that I just entered. Does that make sense? It make whole lot of sense. It make whole lot of sense, ladies and gentlemen. It make whole lot of sense. It make whole lot of sense. When I tell it make whole lot of sense, you understand what I'm talking about. So please, I have to just put us through again. These are the two major strategies I think I need to work on for us so that we can always be in profit and be able to trade independently even when signal had not been given to us. So you see what I've just done? So you can see the market. So imagine your entry was here. Let's look at it. Imagine your entry was here. Even if you didn't enter immediately when you tap into this, but that was supposed to be your entry, then your stop loss is below, maybe here. Or even if you say you want to be very conservative, but I don't see what conservative you want to go when the market are presented to you. So look at it. That will be 1 ratio, almost 1:3 risk reward. Yes. So if you now extend back to 5 minutes, then you can see the market trending up. So you can now say, okay, so this is a fair value gap. So will it break it? If you break it, it called an inverse. So if it's do a fair value inversion, FEG inversion, that will make a lot of sense. That means the market will travel well. But if you cannot inverse it, then that means we're going to be rejected either on the fair value gap or on this other block. And remember, I said when you have a fair value gap before another block, it made that other block a very powerful one. And so for me, if I want to do, I can go to my market now here, and I can take partial profit. But because I do not even enter on time, right, you can see that I put my stop loss very far down. Okay, you can see. So if I like now, what do I want to do? I probably want to adjust my stop loss. Maybe it's still going to, I'm not breaking even now. It's just to reduce my excessive stop loss, meaning that I actually expect the market, but it's still very risky. So because this liquidity below here is still very important, that means where my stop loss is still normal, or as it were, right? So this is how you actually trade and then be able to maximize profit. So if you go back to 15 minutes, you're going to see that if you're waiting for 15 minutes, you wouldn't have entered because you didn't scale down to a lower time frame to be able to find a proper entry on time. Now, look at one of the beautiful things that will have happened. If we're able to scoop out of this point, oh my God, then that you are looking at this point and in order. So, ladies and gentlemen, this is how you should be trading. This is how you should be trading. Do you get it? This is how you should be trading. I give us a signal on Euro JPY, so it's already running in profit right now. And CAD JPY, we said we have a limit order that was set, and the market we have to just pick from where it is, and then that one too is already running in profit. So, ladies and gentlemen, this is what we do, and this is how we trade and maximizing profit as much as possible. So you don't waste too much time in finding an entry. You work your strategy down and all of that. So you can see those of you who are in my inner Asia Hunter group, then I've given you these indicators that can equally help you to maximize entry. I give you two different indicators of the same thing, but of different version that can give you early spotting of entry and all of that. So, ladies and gentlemen, watch it and ask me questions. They want to join our group. You are watching live on YouTube and all of that. You can inbox me, and then we will add you up. My name is Midas Feljimo. I'm the team leader of Plan B Express. Plan B Express, together we rise. Bye bye.